This is our Forex blog for September 8th, 2011. And today is a lot easier day to trade than the previous day, mainly because we had some very strong trends that were strong on most of the time frames. For example, the Australian. Pretty much since 3, it was strong all day. The real-time bar-by-bar analysis, statistical trend strength, which is made up of 5 of our tools. 3 of them measure the direction of the market, and 2 of them measure the intensity of the direction. And so whenever you get 80 plus readings, pretty much all the Australian pairs are going up, and they're doing so with decent intensity. Anything under 80 is less than that. Underneath that, we have the intermediate time frame trend, the daily, weekly, and monthly. So from 3 onward, pretty much the Australian was extremely strong. The Swiss was weak for the most part across the day. The Euro was weak for most of the day. The pound was quite strong for this 5-hour period here. Keep in mind, anytime you trade a currency that's strong, where the weekly and monthly trend, which is the bottom 2, it's going against that trend, you got to be careful. Earlier in the day, the pound was weak, and at 12:30, you can see the dollar was for the most part strong, and so was the yen. So the pound yen would have been, and also the pound dollar, a good trade from about 1 to 6 o'clock. Here's the pound yen. 1 o'clock, you can see it went down. You short the hourly right here. That's the pullback trade. It falls another 20 pips. A little counter trend trade here that fell. Counter trend trade here that fell. And guess what? After 6, the pound was no longer super weak, and it went the other way. Let's look at it against the dollar. Now, this wasn't the best trades in the world. You can see, though, for most of the day until about 6, the pound was in a downtrend, and if you sold little counter trend moves, for the most part, you didn't lose money. You didn't make much on this trade either. This was one of the counter trend trades. Anytime you see a big yellow circle, it's a pretty high probability reversal area. Let's go look at some of the higher odds trades. Very, very weak Swiss, very strong Australian, and so therefore buying the Australian Swiss, very high odds trade, which is very likely to give you a lot more pips than the pound pairs did. If you look at this from about 3 o'clock onward, you can see that right around 3, and even before that, you started to have some Australian strength. The Swiss was weak an hour before that. So from 2 o'clock, the Swiss was weak, and at 3 o'clock, the Australian became strong. You might have bought this little breakout right here, or if you wanted to wait for it. Sometimes breakouts fail. If it goes up, comes down, it goes up again. Usually, it's going to continue. You can use our trailing stops to get out. You can draw trend lines underneath those bars and get out when it's broken. Buy this pullback here, out with a small profit here, out with a small profit here, huge 50 pip win here, pullback trade here, you might have got out with a small win, and then when it broke out again, most of these markets move in waves, so you can just simply draw fibs on each swing and use that to know when to get out at the next level. Now this, in addition to using regular minute bar charts, you can also use our new range bar charts. If you want to trade something that's similar to a 5-minute bar, you add this ATR function, and it tells you that from 3 to noon, one of the most volatile times where most people take their trades at, this currency moves about 8 pips per bar. So instead of using a range or a 5-minute bar, you could simply put 8R on here. It's going to download tick data, and it's going to show an 8 pips per bar chart. If the market moves 8 pips in 1 second, it's going to show the bar for 1 second. If it takes 10 minutes to move 8 pips, we're going to see that as well. And it also gives you a lot more opportunities to get into these trades. First of all, at 3 o'clock right here, you might have bought this breakout right here a little bit earlier with your stop here, or if you wanted to buy that pullback, anytime you have a 2 to 5 bar counter trend move, the first bar that goes green, you buy it with your stop a pip or 2 underneath the bar's low, and you can see this pretty much went straight up. Nice 3-bar pullback. You would have went long here with your stop underneath here and maybe exited out with 10 pips. Here you have a nice 5-bar pullback. First bar green, you go long. That also went up 20 pips. So there's really a lot of trades that the range bars find, and you can see when it's more active, there's more bars, and when the market's dead, there's a lot fewer bars. And so it's a lot easier to trade with that. Remember, the Australian was strong, and also the euro was weak from 5 o'clock onward. So you'd want to be selling the euro Australian. Let's first take a look at this here. Yeah, it was a little bit, you can see the strength of the euro dissipated at 3. This one became strong at 3. And you never really want to focus on two currencies that are both green or not super strong and super weak. But right around 5 o'clock, this one was super strong, this one's super weak. This one already made its first wave down, but you could have sold the low right here. And that continued, and you also have a nice little counter trend move up here as well. Let's take a look at this on a 8 pips per bar chart. Each currency has its own volatility patterns. This one might be best watched with a 6 pip per bar, or in some cases more volatile pairs, 10 pip or 12 pip bar. But you have this nice trend down here, and notice, you have this nice little rectangle patterns to sell that you don't see on regular 5-minute charts quite as well. And they work quite well, especially after a little bit of a pullback where the market goes into a sideways rectangle pattern. You have nice, very high probability entry, and you also have Fibonacci profit target to help you get you out. These are some really huge moves here. You're short right here at 32.15, and let's say you get out here at the fib target. You made about 55 pips in that trade. And you can see a nice multi-hour sideways range. When it broke down from here, you go short again, and you also have the Fibonacci profit target on that last wave to use as a guide to get out of this trade. So you're short at around 31.50 and out around 31.12 for another 35 pips. Trading the weakest ones versus the strongest ones, and it's very clear that the euro is one of the weakest currencies. You could trade that weak euro against the super strong pound from about 6:30 onward. The euro pound's very likely to fall. This one's not as volatile, so we'll go to a 5 pip per bar. And from about 6 o'clock onward, you want to be selling the weak euro versus a very, very strong pound. So here's 6. You get a little bit of pullback. You might have went short here. False alarm. You might have made a few pips on that. Nice little counter trend trade. The range bars are so pattern oriented. You just have these beautiful trades. You could have also sold here, nice little sideways rectangle, a multi-hour sideways rectangle, and it's just very clear. Now once it moves a considerable distance, you might want to be more cautious in selling down at the bottom. In other words, I might not have sold this one right here, but a deeper pullback like this I would, because even it comes down in double bottoms, you have a good chance of making more pips than what your risk is. If you sell it so close to the low and you only make 10 pips and you're risking 10 pips, then it doesn't meet the risk versus reward criteria that every trader should have on their mind at all times. Again, strong pound, a very weak Swiss. The pound Swiss very likely to be a very big runner up after 6 o'clock. And even before 6 actually, because the Swiss was weaker than the weak pound. If you look at this chart here, and this is a more volatile currency, so we might want to do a 12 pips per bar chart just to make it fit the criteria. But here's 6:30, buy this little pullback, nice 50 pip move. You have another pullback right here, which hopefully you can see is very it's very clear to see nice smooth pullbacks on these trend pairs. And this went slightly higher right here. You might have, even if you're an aggressive trader, bought here. Don't get greedy when you do such, buying at the highs. Draw your fibs on that last wave, and be quick to get out of this kind of trade. You wouldn't have made that much on that trade, but still a high probability trade, probably 70% likely to work. And here's a very nice, decent pullback. You got a very strong pound, a weak Swiss all day, and again, guess where this one went to? Does anyone have to guess? Fibonacci profit target. It's a great place to exit your trade. You're in this trade around 38.75 and almost out, pretty much 100 pips up. So I'll use this last example to end for today. Come to our class to learn some of the more advanced methods that we don't go over in our Forex blog.